With this week's edition of the Lucia Capital Group Weekly Video, I'm Rick Plum. There's a lot of talk these days about nursing homes and sick people, and the fact is that there's a really good chance that at least one member of a married couple will need some kind of long-term care during their lifetime. So it's good to have that discussion. Right now, we're seeing two things happening with long-term care. The cost of care keeps going up, and the premiums for the long-term care insurance keep going up as well. In fact, your premiums can rise even when you've already had a policy in place for a while. And just having the discussion about long-term care with somebody can be a challenge because they're often convinced that they'll never need it and they don't want to pay for something they don't believe they'll ever use. Not only that, but with the pandemic and the problems that have come up in some nursing homes, many people feel it's better to get care at home. And while nursing homes are expensive, home health care isn't cheap either. So what can you do? The answer to this problem may lie in something known as a linked benefit contract. This is a hybrid cash value life insurance policy that allows you to access the policy's death benefit before you die in order to pay for your long-term care needs. Now, normally, of course, a death benefit is paid to your heirs after you're gone. But this way, you're able to use a portion or all of that death benefit on yourself while you're still alive to help cover your long-term care expenses. Here's how it could work in a quick hypothetical example. You'd put, let's say, a $50,000 deposit into an account with a life insurance company. That money is still yours. It's just on deposit, and there's a death benefit too. Assuming you leave that $50,000 alone and you don't take it back, if you die without ever needing any long-term care for yourself, your heirs would receive, well, in this example, maybe $80,000 or $90,000 tax-free as a death benefit. So you turned $50,000 into, say, $90,000 immediately upon your death for your heirs. But if you do need some kind of long-term care, the policy will take a portion of that death benefit and reimburse you for your care-related expenses. If you only use a portion of the death benefit, the remainder is paid to your heirs after you're gone. Now here's where it really gets interesting. If you wind up needing more money than what the death benefit provides to cover your long-term care needs, the policy would keep paying for your care up to as much as 2 or even 3 times the death benefit amount, all tax-free. Of course, not everyone has 50 grand just sitting around waiting to be put to good use. So there are options available in certain hybrid policies that can stretch out the premiums over a period of many years, or in some cases even a lifetime. And because premiums and benefits are guaranteed by the insurance company, there's no concern that the rate will go up. Now, to be clear, the amount of your death benefit and long-term care benefit will vary based on your initial deposit, your age, your insurability, and a few other factors. But this is a general idea of how it works. Nobody wants to have their life savings decimated by the cost of long-term care. Yet this is exactly what happens to many people who aren't prepared for what might lie ahead. If you want more details on how a linked benefit insurance policy might work for you, just give us a call. As always, we're here to help.